I want to highlight the advantages of momentum investing. Number one, momentum investing capitalizes on trends. It aims to ride existing trends, which can lead to significant gains if the trend continues. By buying assets that are already performing well, investors align themselves with market momentum. Generally, there must be a market trend. If the stock is trending higher as expected, then a momentum investor will key into that particular trend, buy at a given point, and then ride out the trend as the market price climbs higher. And not only that, this particular strategy cannot work without a trend. Trend first, and then the investor buys the stock. The investor does not buy a stagnant stock, but rather a stock that is experiencing an uptrend. That is what will encourage a momentum investor to key in. Number two, simple to implement. The strategy can be relatively straightforward, compared to other approaches, compared to contrarian, compared to growth, compared to value investing, compared to other strategies. This particular strategy is very, very simple, and it's anybody, everybody who's interested can learn the process and very easily, can start benefiting from this strategy. Investors look for a clear signal of performance. That's what to start first. There must be a clarity that of the fact that the asset is performing well, such as rising stock prices or positive earning reports. Whenever the earning reports are out, and then there's that particular uh, information that the stock is doing very well in the market as per its annual or quarterly reports results, then the investor can now key in, can buy into the stock with an expectation that the momentum is going to generate, that result will generate, will cause the stock price to rise as a result. Number three, potential for high returns because of momentum investing. Uh, it involves buying assets that are recently performing well. First of all, the asset or the stock must perform well. If it doesn't perform well, in the first instance, a momentum investor will not bother about buying. That is very, very important in these particular regards. And they must have a potential to generate higher results, higher returns, especially in a strong trending market. In a trending market, a market trending higher, a market trending upward, stocks with very good fundamentals, profitable stocks tend to go higher. So there's always that potential for high returns. You stand to benefit, you stand to gain as a momentum investor. Number four, flexibility. Momentum strategies can be applied across different asset classes, including stocks, including bonds, commodities, and even currencies. This allows for flexibility in adapting to various market conditions. So it's a very, very simple and a very flexible investment strategy. It's not restricted to stocks. Any tradable investment vehicle is a candidate, you know, for momentum investors. Number five, systemic approach. When it comes to momentum investing, it involves quantitative models, and systematic approaches which can reduce emotional decision making and improve consistency. Because of the quantitative model involved, you don't make decisions based on mere emotions. No, your decision making is based strictly on the quantitative figures, quantitative analysis. The outcome of quantitative, research or outcome. So human emotion is completely removed out of the equation. when it comes to momentum investing. You're not guided by emotion, you are guided by pure fundamental results. And of course, this particular approach would improve consistency in your yield and consistency in your returns as an investor. Number six, shorter holding periods. In momentum investing, the holding period is very short. It may not be as short as day trading, but it's longer than I think compared to maybe value investing or contrary investing, the holding period is shorter. Momentum strategies can sometimes involve shorter holding periods, allowing investors to take advantage of quick market movements and potentially reduce exposure to long-term risk. The longer you hold a stock, the longer you are exposing yourself to uh, stock related risk, and the shorter you hold the stock, the lower you are exposing yourself to market or stock related risk. And so momentum investing guarantees a shorter holding period. It may not be as short as day trading, but it's considerably shorter compared to other investment strategies. Please like this video, give me a thumbs up, and don't forget to subscribe to this channel. It will do me a ton of good to encourage me to keep on bringing, you know, items or contents of this nature to you. Number seven, adaptability. The strategy can be adjusted to fit different time frames and different market conditions, such as focusing on short-term momentum or long-term market trend. The most important thing here is what is the trend. After the trend, the second most important factor is the time involved. And so, if a trend would take a longer time will extend over a longer period of time, uh, a momentum investor is willing to hold that stock for that length of time. And if the trend would take a shorter period of time, the momentum investor is also willing to hold the stock for that length of time. And so that adaptability is there. Unlike long term investing, you must hold the stock for the long term. But in momentum investing, the holding period is governed, is influenced by the duration of the trend. And number eight, back testing and data analysis. Many momentum strategies are backed by extensive historical data. You have to dig into historical data involving the company you want to invest in and ascertain how the company performed in time past. They believe that the current trend will equally last as long as it lasted in time past. So it involves back testing based on extensive analysis of historical data, which can help in developing and refining effective trading rules. And of course, it will help you develop a personal model that will guarantee a win in the market. While momentum investing offers disadvantages, it's important to be aware of the potential risk. The risk is always there, such as an increased volatility and a potential sudden reversal in trends. That is the risk involved. But considering all these advantages, if you really apply them, if you study them critically, it will help you in making you a more confident, a more knowledgeable and educated uh, momentum investor.